Welcome back to the Williams Real Estate Channel. I'm your host, Geordie Williams. Today we are discussing how to recycle equity. So to start off, equity is the amount of capital that you have in your property that is not encumbered by a loan. So for example, if you have a property for a value of 600,000 and you have an existing loan on that property for 50%, so call it 300,000, you have $300,000 worth of equity within that property that doesn't have a loan against it. So most banks typically lend up to 80% of the property's value without lender's mortgage insurance. So if you were to refinance that loan, you could borrow up to $480,000 of that $600,000 property. Therefore, it would provide you accessible equity of $180,000 that you could cash out and then add that extra $180,000 to that loan. So in order to do that, you would firstly order a revaluation on the property. The bank would typically either send out someone to do a full valuation, or they may even just need to do a desktop valuation based off the bank's policy. You would then apply for 80% loan based off the new valuation of the property. You then, once the loan is approved, they'll increase your existing loan up to 80% of the value and debit the cash into your offset account. You can then use this money for a deposit and closing costs for your next property. So this is a very powerful way to expand your portfolio quickly. It saves you time from not having to save up the cost for a deposit and closing costs for your second and third and fourth property. So it allows you to consistently move forward. As the market continues to rise, you can then refinance your properties, increase your loans, draw back that equity, and then recycle that equity into your next deals. So this is a very powerful strategy that is used to grow portfolios quickly. And then as you can use this strategy, we like to then pick up properties initially for under bank valuation. So before we would recommend a property to a client, we would automatically order the desktop valuation or the RP data report of that property, which most banks use, and would only recommend a property to our clients which we could secure for less than what the valuation is. So upon 6 to 12 months, once you have settled on that property, you can then order the valuation, release your equity, and recycle it into your next deal and continually move forward and build out your sustainable property portfolio. Thanks for watching.